Hey guys, and welcome to the Working Money channel. So this just in, Bakkt broadens crypto trading horizons, expanding services to 5 new countries. If you guys don't remember, Bakkt is was pretty much the first institutional crypto solution that was released at the end of 2018, maybe a little prematurely. I did a video on Bakkt way back then, no pun intended. I'll see if I can find it. I'll put it up here in the top right-hand corner to give you guys more information on who runs it, if you might want to get some background info. Global expansion, though, for Bakkt. Okay, Bakkt extends its reach, enhancing its presence in key international markets. So they're looking at strategic partnerships, too, in collaboration with Happy and Solo Trade. Bakkt now offers active crypto trading in multiple regions. They're extending to new territories, including Brazil, Guatemala, Spain, Hong Kong, and Singapore. Bakkt significantly increased its global footprint, so they are looking at future growth aspirations. So the plan is underway to further expansion into the UK and Australia, indicating Bakkt's ambition for a more extensive global presence. Focused on regulatory clarity, Bakkt prioritizes navigating markets with clear regulation, aiming for compliant and innovative trading solutions, and also market selection, adapting its strategy to focus on high-potential, well-regulated markets outside the challenging U.S. environment. So even Bakkt, companies like Bakkt who have connections, I do urge you guys to watch that video, do have big connections to traditional American stock exchanges. They're also seeing a challenge because of the lack of regulatory clarity in the United States. Bakkt's latest move is a significant step, though, in globalizing crypto assets, highlighting the importance of strategic expansion in the evolving crypto economy. So none of these guys are really sitting back and thinking, okay, I guess the regulation in the U.S. is going to happen tomorrow. They are actively looking to be broader, bigger players in the global market when it comes to crypto adoption. So wanted to thank Cryptic Poet there just for posting that. On top of which, FINRA is now saying 70% of all crypto communications contain regulatory violations. So, based on the, regulations that they are putting in place right now, they're saying that there are violations left, right, and center, almost 3/4 of crypto transactions, definitely over 2/3. In a press release, the Financial Industry Regulator, or Regulatory Authority, rather, which creates and enforces rules for registered brokers and brokerage firms, says they found that violations in up to 70% of crypto communications after conducting an investigation. So according to FINRA, it's looking for violations of its Rule 2210, which prohibits claims that a false, exaggerated, promissory, unwarranted, or misleading. After examining 500 retail communications, the organization found that the majority of them violated the rule. As stated by Ira Gluck, Senior Director of FINRA, he said, our analysts were asked to focus on substantive violations of applicable rules as opposed to technical violations. So these include looking for false, misleading, or promissory statements, such as did the communications falsely imply that crypto assets were offered through a broker-dealer? Did communications then misrepresent the extent to which federal securities laws or SIPC applied? And did the communications exaggerate or misrepresent features of the investment? We also ask our analysts to look for adequate risk disclosure or balancing language, and we really wanted to just ensure that communications included the applicable risks associated with crypto assets, specifically risks associated with the manner in which crypto assets are issued, sold, held, or transferred. So they are noticing, retail traders, obviously, they are not that sophisticated. You and I, they don't expect us to know what the heck we're doing here, and they want to try to nab us, right, on these, whatever it is, capital gains implications. Of course, it's going to depend on which country you reside in. But this is an American study. This is what's coming out of the United States, and they're saying, 70% now of what retail traders are doing in terms of their transactional history when it comes to crypto assets there's something in violation there. So to the point that the U.S. clarity, the regulatory clarity for crypto assets in the U.S. isn't there yet. It does need to still be ironed out. This is pretty much good for us because if they can't get their ducks in a row, that gives us an advantage, guys. And hopefully we do see, this market really heat up before they can get their ducks in a row. I mean, I'm cautiously optimistic. I don't have a feeling it will happen that way. I do think we'll probably see some meaningful regulation into 2024, definitely into 2025, if once we do see this crypto market heat up. So again, guys, this is just the beginning. We still do have several months of bullish momentum before we start to even think about cashing out. And for those of you guys interested in what I'm trading this bull run, I do have a diversified portfolio. You can find all that at patreon.com/workingmoneychannel. It is $5 a month, though, so you can subscribe for free, but to get all the information, you do have to pay the $5 a month. I've kept it relatively affordable, though, because I do really want you guys to benefit. I know some people, charge upwards of $50, $75, $100 a month for the same kind of thing. I'm not doing that. I'm just showing you guys what I'm trading, and I'm not giving any advice. I'm just showing you guys what I'm doing there. So if you want to hear my opinion on trading, my picks in detail, you can find me patreon.com/workingmoneychannel. Now, what else is going on in the Ripple ecosystem? This one courtesy of Ian Binns here. Ripple shares a big update on XRP Ethereum sidechain launch. So, this launch has been long awaited for an EVM sidechain for the XRP Ledger, guys. In a tweet, RippleX shared the latest update on the XRP Ledger EVM sidechain developed by blockchain technology firm PeerSys. We heard about their collaboration with Ripple a few months ago. In line with this, RippleX delivers an update from PeerSys, which discusses the progress and upcoming news. PeerSys highlighted that 2024 has started being closer than ever to the launch of the long-awaited EVM sidechain for the XRP Ledger. And guys, here's what PeerSys has revealed. First things first, the X-Chain Bridge public amendment here. Let me just open up this tweet. The public amendment has already been published by the Ripple dev team and is available for voting. This is an essential prerequisite for the launch of the EVM sidechain. It currently has 7 of 28 votes needed from validators, and you can follow it there. I will link all this in the description for you guys if you're interested. The EVM sidechain for the XRP Ledger. So the sidechain is more advanced than ever. After the audit with Bishop Fox, a second one has been carried out with a recognized supplier that we will soon publish. And the latest changes are applied, and the blockchain update has been made. A new version of the bridge is about to arrive as well. It will now allow you to automatically and dynamically bridge any existing token in the EVM sidechain to the XRP Ledger. Down here, we are preparing for the latest version of the Block Scout Explorer that is even better than ever. And again, guys, I will link all this in the description for you if you want to follow further. Make sure to follow PeerSys, where we will update you guys on all the news for the EVM sidechain. So this is about to be delivered. This tweet was from a couple of days ago. A lot of interesting new developments here on the XRP Ledger. And the interesting point I wanted to make is that it is going to be directly interoperable and made specifically for the Ethereum blockchain. So allowing more applications to occur on the Ethereum blockchain, leveraging the XRP Ledger. So great news here from Ian Binns. Wanted to thank him for posting that. Wrath of Kahneman also bringing our attention to this piece of news. Ripple partner Corpay has made an end-to-end corporate management payment platform. And Ripple Payments, guys, is it included? The #1 B2B commercial MasterCard issuer in North America simplifies corporate payments and spending into one easy-to-use, all-in-one, mobile-ready platform. And so this has to do with Ripple partner Corpay, a FleetCor brand and global leader in business payments. Today, they just announced the launch of Corpay Complete, a next-generation spend management platform for corporate payments and spending. So this is the first of its kind solution and can now be available to new users in the United States and Canada and to eligible existing customers. Corpay Complete uniquely combines all aspects of spend management and payments into one mobile-ready platform. This integrates corporate cards and expense reimbursements with account payable automation and supplier payment into a unified solution. And so here's a quote, guys. Siloed software is fintech's biggest problem, increasing costs, slowing down collaboration, and causing inefficiencies. Through Corpay Complete, we are finally breaking down these silos to give finance teams a more complete and precise understanding of their payments and working capital. This coming from Rick Fletcher, president of Corpay. Corpay Complete provides simpler, more efficient management of expenses across both field and AP spend. No longer do companies need to sacrifice rebates and payment controls at the expense of easy-to-use payment approvals that work with their ERP. So a new integrated way to leverage this Ripple partnership. So MasterCard, #1 B2B commercial payment system issuer in North America. Corpay is one of the most financially stable non-banking payment companies too. So they've got a history behind them in the industry, which they now have, it allows them to establish trust between vendors and businesses of all kinds. And because they are using Ripple-enabled Corpay, this is allowing agility and unparalleled payment scaling. Corpay Complete is a culmination of the company's industry-leading payments, card networks, and cutting-edge software capabilities developed through years of marketing experience, product innovation, and customer insights. So another great partnership here coming from Ripple partner Corpay. Wanted to thank the Wrath of Kahneman for posting that. Some more interesting news here, guys, coming from David Schwartz. Michael Branch posting this. Did you guys know David Schwartz did liken the XRPL to Google? He said he compared the XRPL to Google, says XRP should be the winner for cross-currency payments, or at least that's what they're hoping. David Schwartz has likened the XRP blockchain value proposition in the payment landscape to the utility of tech behemoth company Google. Now, this morning I did a video. David Schwartz did talk on Tony Edwards' podcast, Thinking Crypto. I will post that video up here in the top right-hand corner for you, giving us some insight on their recent partnerships, ones that they forged last year. One example is through Mataco and the connection to HSBC. Well, David Schwartz apparently did another interview here with CoinDesk. Ripple CTO elaborated on the evolving crypto ecosystem, emphasizing the niche where the XRP ledger aims to excel. So cross-currency payments, obviously that's where Ripple has seen the XRP ledger really benefit, at least especially in the early days. Specifically, though, the interviewer inquired about the growing trend towards a multi-chain crypto ecosystem where each chain possesses distinct use cases. So, just going back to that EVM sidechain update, obviously interoperability, a big theme here for Ripple. So, multi-chain use cases, considering these varied niches and specialties, the CoinDesk journalist asked whether the concept behind the XRP ledger implies that it aims to emerge as a predominant choice for payments. And guys, in response, David Schwartz asserted that he firmly believes that the XRP ledger with its native asset XRP is set to excel in cross-currency payment solutions and liquidity provision. So that is very important. According to him, XRPL's design and optimizations specifically cater to all use cases, drawing a parallel. He suggested that a failure in the niche areas would be akin to Google failing in its primary search function. So that is how robust it is, in his words. And guys, this is a quote: "I strongly believe that the XRP ledger is the best option for cross-currency payments and liquidity provision. It was developed specifically for this purpose, and everything has been optimized for this particular use case. Therefore, if it fails to deliver in that area, it would be like Google failing in search." So that is how David Schwartz is likening the XRP ledger, comparing it to Google. Empathetically, the Ripple CTO's confidence in XRP stems from its tailored design for facilitating efficient cross-border transactions. And David Schwartz, of all people, would be the one to know how robust the XRP ledger is. Of course, one of the original architects of the XRP ledger and the XRP cryptocurrency. So wanted to thank Michael for bringing that up. Of course, the liquidity provisions, a critical sticking point for XRP to become utilized on a broader scale. This one coming from Panos, very important to note. Becoming a liquidity provider is not risk-free. Remember when we were talking about AMMs, automated market makers? I did a video recently on that, which I will link up here in the top right-hand corner. He's saying it's not risk-free, it's not staking or passive income on top of your XRP or initial capital. So I'm sure many in the XRP community, perhaps very upset with XRP's performance, looking to leverage their XRP to yield some profits here. Panos giving his opinion on this. David Schwartz did respond, though, to this too. Panos, though, first of all, he says, and it's certainly not about earning by holding. Only provide capital you intend to use specifically for LPing and not for holding. This is why everyone should complete this course about XRPL AMM. And so he links the course there, and I will link this in the description of the video for you guys. Now, the interesting thing is how David Schwartz responded here. So another tweet from Panos: "An AMM is like a self-running stall at a market that always has items to trade. The price of items isn't set by any one person, but is determined by how much of each item is available. If lots of people want to buy a particular item and start trading their items for it, the AMM adjusts the price so that the item becomes more expensive. If people want to get rid of the item and it starts piling up, the AMM makes it cheaper." So basic supply and demand here. This way, the AMM keeps the trading going by balancing supply and demand automatically without anyone having to manually set the prices. Okay, but can you in fact lose money by acting as an automated market maker? And I think this is, what most people in the XRP community would be wondering. I mean, if you've spent your hard-earned dollars purchasing XRP, investing in one of the best cryptocurrencies, I think, on planet Earth, you probably don't want to lose it, right? Jay here saying, what's the risk of losing your XRP? And David Schwartz actually came out with a pretty lengthy explanation here. Is there a risk? David explains, unless there's a bug or a flaw in the AMM implementation, it is supposed to be impossible for a particular invariant to be broken. By the admittedly weird standard of that invariant, it is not supposed to be possible to lose. So interesting, but we're going to read on here, okay? When you provide liquidity to an AMM, depositing it into pools, you get liquidity tokens that are specific to the AMM whose pools you contribute to. You can measure at any time the value of those tokens in this very strange way. The square root of how much of the first asset you get if you redeem your tokens times how much of the second asset you get if you redeem your tokens divided by the number of liquidity tokens you have. This AMM strategy is to only permit this value to increase regardless of the prices of the underlying assets. This particular strategy was chosen because it should be able to turn volatility into an increase in actual value of the token over any period of time in which the ending value of the tokens is the same as the starting value. So that is the complex answer, I guess. This does not, however, prevent a loss in actual value. So here we get into more nuanced approach, nuanced explanation. For example, if today you get 1 XRP and $1 for your tokens, and tomorrow you get $1.05 XRP and $1.05 for your tokens, the AMM strategy worked. The constant went up from $1 to $1.05. However, the price of XRP in dollars is lower. Then your position lost value, though not as much as if you were to have held XRP. So you following here? So the pluses, and he gives the plus side and the minus side, which is great. By this weird metric, he says, it should be impossible to lose value. You can turn volatility into yield. You can get some yield by providing people who are willing to pay a spread to trade. You don't lose as much if the value of one of the underlying assets drops because you sell all the way down and so hold less of the dropping asset at the bottom. But the minuses, guys, if the price of the asset goes up, you don't make as much as you would if you held the underlying asset because you sell all the way up, and so that's the benefit of just holding XRP. No particular yield is guaranteed, so that's a downside. You can lose money if price goes down, and while you'll make it back if they go back up, there's no guarantee that it will happen. You have exposure to at least 2 assets, and even if one is a stable asset like USD, there's counterparty risk. It's always possible some bug in the AMM implementation or XRPL issue causes something unexpected. So that is essentially the long and the short of it. Seb down here saying, David, could you please provide a few numerical illustrative examples how the AMM will work? And what about the impairment loss? What's the expected impact? So David Schwartz does give another example here, which I will get into. Here's an unrealistic example. To give you a general idea, some say XRP is at 50 cents and straight line drops to 40 cents and then climbs straight line back up to 50 cents. This is the worst case for that price movement because it's the minimum possible volatility. Let's assume a 0.5% pool spread and you put into the pool 2 XRP and 1 USD worth about $2. On a straight line drop to 40 cents, your liquidity tokens should wind up being redeemable for about 89.6 or 0.896 and 2.234 XRP. That's only worth $1.79. On the bright side, if you just held that $2 as XRP, it'd be down to $1.60. So now when XRP goes back up to 50 cents in a straight line or starting assumption, your liquidity tokens are redeemable for about 99 cents or just under $1. And $2 and $2.0033 XRP worth about 2.0007. So you made a gain of about 3.5 BP, even though the final price of XRP stayed the same as the starting price. So that's how the liquidity profit works. Realistically, though, if a digital asset has such a large drop in price, followed by such a large gain in price, there will be a lot of smaller rises and falls inside of that movement. And so the more of them that can be captured, the better the AMM does. For example, let's say instead of 50, 40, 50, we imagine alternates dropping by 2 and going back up to 1 by 0.40, and then alternates increasing by 2 and going back up by 1 to get back to 50 cents. In that case, when we hit 50, the final result is that your liquidity tokens are redeemable for $1 and 2.005 XRP, a gain of 12.5 basis points. So very complicated to wrap your head around, but I will link this in the description of the video if you guys want to go over it again. Note that this assumes, though, that the AMM can capture the volatility, but it doesn't assume anyone takes the pool's liquidity at a cost. It just assumes arbitrageurs perfectly arbitrage, trading anytime they can make a notional profit. If people are willing to pay the spread, of course, the pool would make a larger gain than if they're not. Again, this assumes the price of the assets come back up. So another detailed, great explanation here from David Schwartz. The pros and the cons, I'm personally, or rather personally like this pros and cons list that he gave here. Essentially the pluses for being an AMM versus the minuses. There's always risk, guys. Can you lose value? Well, yes and no. Personally, this kind of thing, and I mean, I don't know, maybe I'm wasting my time here. I don't know if you guys are even interested in automated market making. Put it down in the comments if you are or aren't. For me, holding crypto is really what I know. I know in one of the videos I did this past week, I said that I have 11 years experience trading. I actually calculated it, and this will actually be my 13th year trading, and I started trading stocks. Now, of course, into cryptocurrencies and diversifying my crypto portfolio. Again, this time around, I'm learning since the last bull run. That is my strategy. You can follow me at patreon.com/workingmoneychannel for more information on that. But that's just my opinion. I want to hear what you guys think. Please subscribe to the channel if you haven't already. Like the video if you like the content I'm providing. I always love hearing your comments. See you in the next one, guys.